Hello and welcome to BWTV. In our last video, we discussed Trump's new tariff strategy. However, it seems like it is an ever-evolving discussion as now Trump has imposed its new tariffs on China. President Donald Trump has significantly escalated his trade war with China, imposing a cumulative 145% tariff on Chinese imports, marking the highest rate in the modern U.S. trade history. While the White House announced a temporary pause on fresh tariffs for dozens of other countries, it doubled down on China, citing national security and Beijing's alleged role in the fentanyl crisis. This multi-layered tariff regime includes a fresh 125% hike declared on Wednesday, which builds on an earlier 20% duty introduced this year. The compounded nature of the tariffs highlights a strategy of incremental escalation with the intent to isolate China while sparing US allies for now. Trump's path to the 145% figure began earlier in the year. February saw the introduction of a 10% tariff tied to fentanyl-related concerns. March added another 10%, and then a 34% increase was announced under a reciprocal tariff framework. When China threatened retaliation, Trump responded with a 15% hike. The latest 125% rate announced this week is not a standalone figure but layered on top of the existing 20%, culminating in the record 145% total. The Trump administration's current tariff strategy builds on trade tensions initiated during his first term, many of which continued under President Biden. The Peterson Institute for International Economics noted that pre-second term, the average tariff rate on Chinese goods was 20.8%. As of now, the total average stands at approximately 125% to 145%, depending on product categories and past levies. In response, China has imposed 84% tariffs on US imports, effective immediately. This tit-for-tat retaliation underscores Beijing's willingness to match escalation with escalation, deepening global economic uncertainty. The economic fallout from this tariff war is reverberating through every layer of the supply chain. US importers now shoulder significantly higher costs, impacting manufacturers, retailers, and ultimately consumers. As per a recent media poll, around 75% of Americans now expect a surge in the price of everyday goods, from electronics to groceries. Meanwhile, China continues to look east and west, primarily engaging Europe and Southeast Asia to stabilize its trade base. It has reportedly reached out to the European Union and Asian nations to build new economic corridors as US tariffs intensify. Markets have been roiled by Trump's tariff maneuvering, while Wednesday's announcement of a 90-day tariff pause for many non-Chinese trading partners caused a short-lived global market rally, also dubbed as the Trump blink. The intensified tariffs on China sent a contradictory signal. The S&P 500 soared 9.5% in a single day before dropping over 3% the next, while the Hang Seng Index fell 13% earlier in the week, its worst plunge since 1997. The gold prices surged nearly 3%, the US dollar weakened against the Swiss francs, and bond markets saw increased demand. These unprecedented tariffs are part of a broader geopolitical chess match. Trump's strategy appears designed not only to punish Beijing but also to reconfigure global trade alignment, with America's neighbors and allies cautiously navigating the fallout. As China warns it will fight to the end and refrains from seeking new negotiations, questions loom over whether global economic actors can absorb the shock of a prolonged tariff war. With nearly $463 billion in China exports and $199 billion in US exports at stake, the world is watching closely, uncertain about who will blink next. For more such stories, keep following BWTV.